Before I go, I think it would be pertinent to talk a little bit about some of the other things that a spouse might think about in considering keeping the home. And one of those would be the costs of having to get out of a family home. So perhaps you can speak to the cost of breaking a mortgage when you go to sell.
Yeah. Yeah, I'm talking about this a lot right now, where people are locking in because they're feeling fearful of what's happened in the economy, for example. So they're taking a longer fixed rate mortgage. But let's say rates start to drop. And this would be the same if somebody's in a fixed rate mortgage and then they end up deciding to sell through the separation, and they sell 2 years into a 5-year fixed. They would then pay something called an interest rate differential. And those penalties can be very, very large. So it might make sense that they renew into a variable rate so that they have a lower penalty. I've seen interest rate differentials in the tens of thousands of dollars on big mortgages here on the North Shore, because it's the interest rate spread that you're paying the difference on for the time that the mortgage remains. And the banks make a lot of money on that stuff. And so the math is in the favor of the lender typically. So it's really important to understand the type of mortgage you have. Like you say, if the long-term game plan is to sell the house.